Yes, welcome back everybody to Altcoin Daily. My name's Austin. There's something very interesting happening with this recent Bitcoin rally, now still over $21,000. And while in our video from a few days ago, I talked about why this Bitcoin pump is happening, the real reason Bitcoin is going up, I will link this down below, check it out. In today's video, we're going to talk about the sustainability of this rally. Can we maintain? Because while we understand that the reason we wicked up so hard, so fast, was due to manipulation, i.e. short traders being liquidated, in fact, looking at the newest data, we see that these short liquidations were their highest since October 2021. So hundreds of thousands of short traders got liquidated, forcing the price up. And that now forces us, as Bitcoin investors, to re-examine where we are. You see, looking at Bitcoin's price on the day chart, we have a very bullish technical indicator. Bitcoin has crossed and thus far maintained its presence over the 200-day moving average. Historically, this signals bullish momentum for the asset. In bull markets, we usually ride above it. In bear markets, we either get rejected off it / ride below it. So this is a key indicator that subscribers of this channel are going to keep watching. And even though we've crossed, we're not out of the woods yet, what I would like to see ultimately is some sort of retest off of the 200 MA, leading to further confirmation to the upside. So don't just play the breakout, wait for the confirmation of the change in momentum. For example, back in 2017, this was the top around 20K. How did we know that this dip was the start of the bear market as opposed to just one of many dips we saw on our way up? Well, a big indicator was, yes, when we crossed below the 200-day moving average, but it's when we crossed below, we did bounce above it, go below again, then ultimately got rejected. This indicated a momentum shift. We saw a very similar thing in 2021, although it was slightly different due to the unusual double top. We broke below it, we actually bounced above it, kept going up, and then broke below it again. But it's when we got rejected in early 2022 that indicated the bulls were weakening, the bearish momentum was sustaining. I can easily give you bullish examples too, because again, that's the question for today. Are we there now? We see after the 2018, 2019 bear market, we did cross above. We never really got that retest. For months we went up before we broke below, chopped around. And then after that COVID crash, we quickly got the retest, which sent us into bull season. Again, this is not a way that you're going to time the exact tops, nor will you time the exact bottoms. But indicators like this are just a good way to gauge momentum in the market / trend changes in an asset price. So while this channel keeps an eye on the 200-day moving average, what other metrics am I watching? Well, another big one on the weekly is Bitcoin's 200 MA weekly moving average. So not daily, but weekly. And historically with Bitcoin, even though this asset hasn't existed for that many weeks, relatively speaking, Bitcoin has usually trended above it. The 200 weekly. In bull markets, in bear markets. In fact, the first time we really broke below for any significant amount of time was we broke below it in June of 2022, so mid-2022, and then we got that confirmation below in September 2022. This tells us that even though we're bullish in the very short term, for the bigger trend change, we're going to need to see a cross above the 200 weekly MA, which is right now sitting at just under $25,000. And then, of course, a breakup, potentially a retest, and a confirmation to the upside. These are two indicators that I'm watching. When anything significant changes, I will make a video. I will let you know. And then, of course, a really important metric used in all markets, volume, showing us if there's more people or less people coming in, trading, buying, and selling this asset. And generally, the more volume, even though volume does represent both buying and selling, but the more volume means the more people, means a bullish indicator generally for an asset. When we start to see declining volume like this, for example, in the double top of 2021, even though price got back to what we saw similar 6 months prior, volume was nothing, relatively speaking, showing us a clear lack of interest. That gave us a clue to bearishness. Now, what do we want to see looking forward? Well, much like other bull markets, you want to see higher highs with volume, 2017, higher highs with volume, signaling bullish momentum. Now, unfortunately, even though we did get a tiny pop, I'm not seeing the volume pick up right now in any significant sense. And again, that makes sense. As per yesterday's video, we found out that Bitcoin shot up due to price manipulation to the upside, traders getting liquidated. Again, link down below, check it out. But this lack of volume is starting to be noticed by other analysts as well, like from Andy Leon. In a direct quote, he says, "This pump above 21,000 doesn't mean the bear market's over. Firstly, the lack of Bitcoin trading volume around the region of 18,000, which we pumped from, and RSI shows that Bitcoin is overbought, showing us that this rally could be short-lived. And then secondly, the massive layoffs by crypto companies in general, as well as the SEC's new charges on Genesis and Gemini for the unregistered offer and sale of crypto asset securities, looks like it would take longer to see a real sustainable bull run." Meaning, even though we've seen a bullish pump, and even if we continue and we do see another bullish leg up, do not bet the farm yet. Now, most of you have heard that the SEC has officially filed charges against Gemini Exchange. I'll give you an update in a second. But this is interesting because even though Bitcoin transaction volume and fees have somewhat crashed, active addresses and transaction count are holding strong, meaning a divergence. Meaning while we are seeing some bearish indicators, there are some bullish indicators to keep an eye on. So the bearish ones are obviously Bitcoin transaction volume trending down, as well as Bitcoin fees, meaning essentially usage on the network, pretty low. Yet, while that is happening, Bitcoin active addresses have started to trend up, as well as Bitcoin transaction count have started to trend up. Now, we could interpret that data in one of two ways. Either investors, traders saw the pump, got excited, and started picking up their activity on the network, meaning essentially that this jump-started the bullish activity on the network. Or another interpretation is looking at the Bitcoin price, maybe that activity was the reason that we started to see just a slight uptick in Bitcoin's price. Of course, that's what triggered the liquidations of the shorts and sent us into this short squeeze. But either way, according to Santiment, which is a market intelligence platform, this is a definite explanation on why crypto prices have bounced. So this is looking at the wallet holdings of the sharks, the small whales, and the whales. So sharks are any Bitcoiners that hold between 10 and 100 Bitcoin. Shark wallets have added over 105,000 Bitcoin in the past 10 weeks. Small whales, wallets of this size, have added over 67,000 Bitcoin in the last 8 weeks. And then, of course, large whales with this size wallets have added over 37,000 Bitcoin in the past 10 days. What does this mean to you and me? Well, Bitcoin bounced following large key stakeholder addresses, meaning the sharks, the small whales, and the large whales, ticking up, finally accumulating big. Now, maybe this is the start of the bull run, or maybe they're accumulating big, just a dump on our heads at around 25 or 28,000. We need more data. And this piece of news is very suspicious. Failed 3AC, 3 Arrow Capital founders to launch a new crypto exchange, GTX, sort of very similar name to FTX. So we notice that just when excitement starts to pick up in the market, all these new projects come about to try and play off that excitement to seek funding. According to 2 distinct presentation decks, Su Zhu and Kyle Davies, the founders of 3AC, are seeking to raise $25 million in order to launch a new exchange named GTX. The new exchange will focus on trading bankruptcy claims filed by crypto enterprises like Mt. Gox, Celsius, BlockFi, and FTX. Here is that pitch deck that was uncovered on Twitter. So how Kyle Davies and Su Zhu pitch themselves, they say, co-founders of 3 Arrows Capital from 2012 to 2022, started with $1.2 million of partner capital, grew to over $4 billion, and then made a whole bunch of money, 40x, 80x in crypto before 3AC went bust in 2022. Would you invest? This is what they're trying to do, raise $25 million seed round to streamline FTX and other bankruptcy claims onboarding and primary marketplace. So let me get this timeline straight. 3AC was at the top of a multi-billion-dollar Ponzi scheme, Luna, the collapse of Terra Luna, They went insolvent, causing the bankruptcy of dozens of crypto firms and losing billions in retail funds. And now they're raising $25 million for a new project. Be sure to use code Altcoin Daily for 10% off your ticket to Bitcoin 2023, the largest crypto conference in existence. We will be there. Come chill with us, come hang with us. Again, link down below. And like always, see you tomorrow.